Hi everyone, welcome back to another video from Indicator Vault. In this video we'll feature the new mean reversion indicator for TradingView. Let's get started by looking at what is mean reversion. Mean reversion, or reversion to the mean, is a financial theory that suggests that price of a financial asset will tend to revert back to their historical averages over time. What this means is, mean reversion trading aims to maximize profit when the price of a particular security fluctuates very widely, in the hope that it will return to its previous mean level. Now that we have a clearer understanding of what the theory is and how people use it to make money trading, let's take a look at the indicator and how it works. Let's start by adding the indicator to our current chart, which is the Apple Inc. on the daily time frame. I recommend adding the indicator to your favorites to make it easy to access. The indicator works on multiple time frames and instruments, meaning it can be used to analyze any instrument listed on TradingView. The mean reversion indicator first sets the quantity of history bars used and next the standard deviation coefficient for the bands. You will notice that the central line is colored in yellow and the upper band blue and lower band red on default. One of the big advantages of the mean reversion indicator is that one is able to determine if price will break a support or resistance and continue a direction, or if a major reversal will occur. What this means is the indicator can be used for both when to enter and exit into the market. The indicator is used to identify potential areas of overbought and oversold so that you can take advantage of moves back to the mean. I'm going to add additional indicators and help you build a complete trading strategy. First, I'm going to add a moving average and select an exponential method and a length of 200. The reason for doing this is I will be using the moving average to determine the trend, and next we are going to add an oscillator to identify divergences in the market. I'm going to be using the Relative Strength Index, or RSI. The reason for adding the additional indicator, it helps us identify areas of overbought and oversold, and using this in conjunction with our mean reversion indicator. Next, let me show you how to place a trade using the mean reversion indicator. What you will see is we have Apple Inc. on the daily, and that price is currently in a uptrend. Remember, our first step in technical analysis is always to identify the trend. Next, we look for key support and resistance zones. If you look to the left, it's always easier to identify these zones for your trading. The indicator is showing us that we are currently in an oversold level from the price. What this means is that a potential reversal might occur. You'll see if we look back that there was a divergence in price because the RSI is currently higher than it was at a previous level and price is at that same area. So if we draw a trend line on our oscillator, we will see that there is a divergence occurring in the market. This means that we now have 3 confirmations that a sell will happen in the market. The amazing thing about the mean reversion indicator, it also helps you to identify potential take profit zones for your trades. You can use the first band as your take profit 1 and then use the outer band for your take profit 2, or alternatively moving your stop loss to break even once price has reached the central band. So let's take a look at this sell trade example. As you will see, the indicator is able to very easily anticipate when there is potential overbought or oversold conditions in the market. By doing this, you are able to maximize your profits and get more and bigger wins. So now that we have seen a sell example for the indicator and how easy it is to determine entry and exit points, remember we also need to identify our bottoms and our tops in the market. A part of support and resistance, or supply and demand trading, is identifying both the highs in the market and the lows. After this simple example of a double top, you will see that it is easy to enter into a sell trade. Now that price has broken through the 200 and is in a oversold area according to both our mean reversion indicator and our relative strength index, or RSI. Remember, most traders consider the market to be oversold when the RSI is below a level of 25. Again, we're going to use horizontal rays to identify the two turning points in the market. Our support and resistance analysis can identify that this is a potential low and that we are currently oversold on both the RSI indicator and the mean reversion indicator. If we look again to the left to our previous levels, you will see that when the RSI was previously at this level of oversold, you could have identified this area. This now is a double bottom in the market through this strong engulfing bullish candle. This bullish candle can show you that this is a strong support and resistance zone, or supply and demand area. By again using our two horizontal lines and looking at our RSI, you will see another divergence in the market. The divergence plus the oversold criteria on both the indicators can do a confirmation, which will give you higher probability entries in the market. What I would recommend is wait for the next candle to open first and then place your trade, as such a large bullish candle will typically have a pullback. After the pullback, because of all of the confluences that you have, you can easily place your buy position and place your stop loss below the large candle. If price was to engulf that candle, it could show a continuation for a downtrend. Again, you have the different areas to aim for from your mean reversion indicator, and always aim for a better than 1 to 2 risk to reward. By combining the indicator with these free indicators available on TradingView, you can build your own strategy by using the replay candle function. You will see that this trade actually easily hit our 1 to 4 risk to reward on this Apple trade. Again, you can see the strength of the mean reversion theory, because once price reached the mean, there was a strong rejection. That is why the indicator will help you with both your entries and your exits and give you more wins and bigger wins. Next, we're going to use the indicator on the 15-minute time frame. Now remember, on the 15-minute time frame, that each candle represents 15 minutes, or 4 candles represent an hour. Again, we are able to identify a key support and resistance zone and a double top. Our confluence that the price was also above our mean then went down and we had a slight pullback. On the slight pullback, you could have entered the trade after this strong engulfing candle. You will see that I indicate this line with less thickness because it's on the 15-minute time frame, a 15-minute level of support and resistance. On the short time frame, you could have easily placed your stop loss above this level and aim for a 1 to 2 or 1 to 1 risk to reward. The indicator has an easy to use, and if combined with other indicators available, it will give you a much higher win rate in the market. It makes it easy to look at a chart and identify potential overbought and oversold areas. I hope that this indicator helps you in your trading, and until next time, happy trading. Bye.